Hey everyone, welcome back. So today's Thursday. It's in the evening now, around 7 o'clock or so when I'm recording this. So we got a couple of things we have to talk about what happened in the markets today as far as the Bitcoin being all down today for I think it's like the sixth day in a row. The miners as well. I think only one or two miners were up in the green today. And then we have HODL, Riot, Marathon also reporting their quarterly results. So we'll get into all of those. We'll have the chapters down at the bottom as always for you guys to skip to the ones you guys want to see. And then after probably today, I'll put up the clips for these as well for the individual miners as well. So they'll be coming out Friday, Saturday, somewhere around there. Okay. So as always, you guys know the drill here. This is not financial advice for your entertainment only. Do your own research. I'm invested in the following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button, subscribe. Helps me out tremendously. So let's take a look at what's going on here in the markets right now as far as, well, the markets and Bitcoin in general. So right now, the S&P finished out the day down 0.17%. Dow Jones was down 0.66%. NASDAQ was actually up 0.31%, so that was actually pretty good. Bitcoin now is actually in the new day. It is actually up right now a little bit here, just barely 0.04. But it was actually down today 2.31%, and it closed at 26,986 for the day. But we can see here that we've had 1, 2, 3, 4, 5, 6 days in the red. We haven't had that in a while here that I can actually see here. The most we had was 5 here, and then, I mean, you're having to go back a lot further to get 6 days in a row where we've been in the red. We obviously went past our 50-day moving average, which is the teal line here. We're now kind of in the middle here. Looks like maybe some support at 27,000, looks like. Don't have any lines drawn here, but it's kind of acting like a little bit of support right there. If that doesn't hold, we're probably going down to our 200 weekly moving average, which is our red line here. And if that doesn't hold, well, then we're probably going down to our 200 daily moving average, which is our blue line here. And if that doesn't hold, then we have our previous support line here at 23,824. I'm hoping that we will get support possibly at the 200 weekly moving average here, or possibly the 200 daily moving average here. We'll have to see, obviously. We still have a little bit of ways we can go down on the daily here. Last time we were down below 30 on it was back on March 10th, it looks like. So, and then we've gone quite nicely up. So I'm hoping that we may find that bottom here right around this 26,000 mark, but we'll see. Okay, so that's Bitcoin right there. Ethereum was down today as well. It has been down 2.56% today to a close of 1,795. It's also been down 6 days in a row here. It's also below the 50-day moving average on that one. Next in line would be probably the 200 daily moving average, which is actually the blue line here, which is right around now at around 1,691 or so. Okay, so we'll see where that one plays off as well. And let's take a look at actually the miners here. So the miners were down today as well. Annie was down 3.77%. Argo was down Argo was up actually 3.6% on the day, which was good to see. Bit Digital was down 10.53%. Bitfarms was down 10.91%. And then we got Cypher was down 8.22%. CleanSpark was down 13.88%, which is still pretty good considering that we've had quite a bit of dilution here in the past couple of months. They diluted like around 40-some million shares, it looks like, roughly. And they got about 99 million, I believe, for their efforts on that to fund their future growth here. So I thought the stock was going to take a beating here, but it hasn't. So that's kind of good there. It's a good sign. Core Scientific was down 3.47%. DigiHost was down 4.73%. DMG was down 2.38%. Greenidge was down 2.82%. Hive was down 7.01%. Hut was down 8.2%. Iris Energy was down 10.7%. Marathon was down 14.58%. Mawson was up 1.36%. Riot was down 12.79%. Soluna was down 0.88%. Stronghold was down 12.61%. And TerraWolf was down 6.91% on the day. So pretty bad day in the miners. For the miners, it's been kind of a rough week, it seems like. We got one more day to go. We got some Bitcoin expiry happening tomorrow, which is why I think Bitcoin price is being pushed down right now. And I didn't want that. Let's take a look at the network hash rate, see what's going on there. We haven't looked at it in a day or two. I believe this is the most recent, and it is. Let's see here. We are currently on the 7-day average at 335 million. If we look at the 1-day average, we can see that we're kind of bouncing back up here a little bit. We're back up to 405 million on that. So we're still quite a ways away from our all-time high of 440, but we're getting close to it right now. Okay. Let's take a look at the stories that we do have here. We'll first get into Hut 8, see what's going on there. So they reported their financial results along with Marathon, Riot, I believe a couple of other ones. Stronghold provided theirs, another company as well. So we'll get into these three today. We'll get into the other ones tomorrow. So we've been having quite a few of them report currently. We've already had CleanSpark report, and I believe it was Cypher that reported also, if I'm not mistaken, as well. The main thing to take away from this one from Hut 8 is on the press release is this issue here, obviously, with Drumheller. So as previously reported, the company encountered issues at the Drumheller site, primarily stemming from high energy input levels that have been causing miners to fail. So that's definitely not good. I don't know how they're getting high energy input levels through their system. That's kind of concerning there. This has materially reduced operations, which are currently at approximately 15% of our installed hash rate at the site. Remediation began in March and gained momentum in April as the team implemented new custom firmware across all miner models designed to lower the power supply's maximum output voltage. And I think most of their machines are, they're not Bitmain machines, they're the other ones. I can't think of the name right now, but they're I think they're Canon machines, I think. Correct me if I'm wrong on there. Designed to lower the voltage power supply maximum output voltage and ensuring our equipment operates within safe limits. So that's kind of what they're working on now. We are actively increasing repair staff, adding in additional repair center shifts, and have procured new hardware to expedite repairs and accelerate the speed at which we bring miners back online, and expect to have complete restoration in 10 to 12 weeks. So possibly not by the end of this current quarter, probably going into Q3 then. We're going to be possibly fixed with all this. So it's definitely a big issue for them. The electrical issues at the Drumheller site have been compounded by high energy rates, which further increase curtailment at the site. Right? They just seem to be having constant issues with electricity, whether it's their provider at the North Bay facility or now at this site as well. I thought they were supposed to have pretty good rates, being that they have most of their electricity coming from hydro, I believe. But nonetheless, this is what we're having to deal with at Hut 8 right now. So it's one thing after another that's causing them grief and causing investors grief as well. Okay, so let's take a look at the numbers that we do have for them. We'll go over all of that. Hut 8, stock price might be off a little bit. I updated this afternoon, haven't updated it since then, so it might be up or down a little bit from where it actually is on this one. So shares outstanding is about 237 million right now. Stock price is about $1.67. Market cap is 397 million. Current hash rate, we've talked about this before, so you guys can see all of this here. The main thing I wanted to take a look at is, number one, their performance here. For the last 12 weeks, you can see it's in the red. 8 weeks, they're pretty much break even. 4 weeks, they're in the red. And then this week, they're kind of actually up a little bit here at 5.03%, or from last week, actually, they were up. So this is last week's data. Looking to some of the numbers that we do have here for the quarterly results. So these have been updated to the latest quarterly Q1 results. And these are all in Canadian dollars here. So we can see that last 4 quarters revenue has continued to come down here. They're at 4.52 million. This is for their self-mining that I have this on, right? Revenue self-mining Canadian. And when we're looking at the expenses here, those have also been increasing here over the quarters. Not sure why they had a huge increase here in Q4. Must have dumped some stuff into it. But it's back up to 25.5 million Canadian dollars on that one. So that's also not good. And that includes everything. This just includes their self-mining, basically. On that one, cost to mine 1 BTC, this is actually in USD converted. So that is gone up here in Q1 to $17.14 thousand per Bitcoin, which they were at 13, which was pretty good, right around there. But that has kind of come up. The other thing that's concerning is their production of Bitcoin has continued to come down here over the last couple of quarters, the last 3 quarters, well, 2 quarters really. It peaked in Q3 with 982 for the quarter, and then it's come down ever since then. And it looks like it's going to be down again for this current quarter that we are in right now. Debt to equity is still good with them. As you can see at 0.15. Current ratio is still really good, 9.8, so no problems there. Total current assets has gone up to 378 million, and that's based on Bitcoin price going up in value. They have a large HODL position. That has obviously affected that. Current liabilities has stayed pretty low. It's not too bad, 30.13 million, up a little bit from 27.79, so that's not bad at all. Okay, let's take a look at the numbers that we do have for them. We'll go through this, and I'll try to increase this font size for you guys a little bit so you guys can see what's going on here. Okay, I'll try to get to these numbers here when we're done through the main parts of it. So cash and cash equivalents went went down a little bit here. So let's actually hide this one, fiscal year 2022. Make it a little easier to go against Q4. Let's see your hide column. There we go. Okay, so now we got 15.9 in cash and cash equivalents. They had 30 million there. So that's down. Accounts receivable is up at least 2.8 from 1.5. Digital assets is way up because Bitcoin price went up. So it's 352 million from 203. So that's a big help for them. Deposits and prepaid went down a little bit to 7 million from 9.8. And total current assets went up to 378 million from 245. And that's based on Bitcoin price going up in value from Q4. Okay. Total current assets, we covered that. Property, plant, and equipment went down a little bit here to 120 million from 124. Deposits and prepaid expenses is still up a little bit, 27.3 compared to 27.2. Intangible assets and goodwill went down a little bit here to 14.9 from 15.1. And then total assets came in at 541 compared to 412. Okay, they're currently, that's in Canadian, and I would have to figure that out, what that would be in USD, to see how they are actually ranked right now with their market cap in USD. But that's good that that has come up, but that's mainly because the only thing that's really saved them here is the HODL position. Liabilities, accounts payable increased to 22 from 13, so that's not good. Lease liabilities went down a little bit here to 3.8 from 4.3, so that's good. And loans payable increased to 12.3 from 11.8, almost 11.9 there. So total current liabilities increased here by about 8 million to 38 million from 30 million in Canadian. And then going down here, total liabilities actually increased to 70 million from 61 million. So that's also not good there. Total stockholder equity came in at 470 million. That's up from 351 million. So that's good there. Total liabilities and stockholder equity up to 541 million from 412. So that's also good. And then here's revenues. This is the part that's concerning. Is we can see here that the revenues for self-mining was down to 14.5 Canadian million dollars. And you can see this trend here. They were at 49 in Q1. Q2 was 39. Q3 was 27. Q4 was 17 million, and now 14 million, and possibly going to be even lower in the current quarter that we are in. Hosting has pretty much gone away for them. High performance computing has increased here slightly to 4.49 million compared to 4.48 million. Excuse me. And that, let's see, high performance computing accounted for 23% of the revenue basically right now. Cost of self-mining estimated. This is looking at the cost for self-mining based on total operating costs. We're kind of looking at maybe 10.9 million for self-mining, possibly based on the percentage here. But we just don't know if that's going to be accurate because they're using GPUs and they're using ASICs for Bitcoin mining. So it's estimated right now. Okay. Site operation costs was down, which was actually good, to 14 million from 16 million. Depreciation down to 10 million from 29. So that's good. Cost of revenue was at 25 million, down from 45 million. So that's good as well. So they're at least getting costs under control here. Gross profit minus depreciation was about 4.6 million. Gross profit minus depreciation percentage was about 24.46. You can see that that has been coming down as well, which isn't good. We want to see that go back up a little bit. Probably closer to 50% like some of the miners are right now. Operating expenses, selling, general, and administrative went way up here to 24.3 million. That's also concerning there from 14 million from Q4. Gain on disposition of digital assets was actually an increase here of 4.9. Haven't had anything else on that before. And then they took an impairment, and mining infrastructure and servers was 113 million in Q4, which we didn't have that. Obviously, that's why we have that big expense here in Q4 for them. Total operating expenses was 25.5 million compared to 152 million. So in that sense, it's good, but it's still up from where we were in Q3, 25.1. Okay. Then net income before tax, that was 27 million compared to 149. So that's fine there. Down a little bit here from obviously the 31 in Q3. And net loss income was actually 108 million in profit. They were in the positive here, compared to a negative 187, and that's mainly driven by the Bitcoin price going up in value and their assets, the Bitcoin HODL that they do have, increase in value. That's what's driving that right there. So overall, they came in at actually a positive 49 cents per share. Basic and diluted was 47 cents Canadian dollars. And then here's where we have basic and diluted number of shares. That's how it's being calculated. So they came in positive because the HODL position that they do have, but everything else is just going in the wrong direction for them. Okay. Looking at some of the metrics that we do have here, it looks like cost of mining 1 BTC came in at 17,000, like I said. So that's definitely an increase there. Debt to equity ratio we already talked about. Current ratio we talked about. Book value of equity assets, about 470 million Canadian. Price to book ratio is 0.84. And then enterprise value is about 535 million Canadian. And then a beta was 119 million, looks like. On the positive revenue of 19 million, general administrative was 24. So 128%, not good. All right. They spent more on general administrative than they actually made on it this past month. Okay. So that pretty much leads us to, are they undervalued, overvalued? Right now, I think they're pretty well valued with a PE of 15. We're looking at the last 4 quarters, which with the current quarter that we're in is an estimate. The prior 3 quarters are actual numbers. Based on that, 50% net income, they're not there right now. They're at 24% net income, something like that. Having $1.72, so I think they're pretty well valued right now as it is. I think a lot of them, investors are giving them the benefit of the doubt because they are going to be growing possibly to 7 exahash with the merger of USBTC. Okay, now when that happens, we'll have to reevaluate things at that point. But right now, I think they're pretty well valued currently where they are sitting at. Okay, maybe slightly a little bit undervalued, but just barely. Okay, let me know what you guys think of this, and we'll get into the next one. So the next one is going to be on Riot Platforms. Riot provided their Q1 financial results as well. I read through this, looking for something of interest here. And the only thing that I found that was really interesting here was obviously the average cost to mine Bitcoin for the 3-month period ended March 31st was $10,354 per Bitcoin as compared to $13,500 per Bitcoin in the same 3-month period of 2022. So that's actually good. Their cost came down, even though network hash rate has increased, but they have increased their hash rate, which I believe is also helping them get better rates possibly for the electricity because they are such a large consumer of it, right? So let's take a look at the numbers we do have for Riot here, and then we'll get into Marathon. So Riot is right there. Let's go over here. So Riot has about 173 million shares outstanding. Stock price is about $11. I think it's down to $10 now, something. Market cap obviously is around 1.9 billion right now. So they're one of the most valued ones out of the bunch that I cover here. They are at 10.5 exahash. They're supposed to get about 12.5. We talked about this in previous videos, so you guys are aware of all that. Let's take a look at some of the metrics that we have for the quarter, though. So the Q1 came in at 48 million. Current quarter that we're in, I'm estimating around 55 million. We'll see if that actually comes in, depending where Bitcoin price goes, network hash rate, and all that. But right now, this is just an estimated amount. But they have been growing here nicely ever since Q3 of last year. That 22 million, 30 million, and 48 million. So they are, I think, might be close to being above the Q1 of last year. But we'll have to take a look at it down the numbers below. Last 4 quarter operating costs, self-mining. This is pretty steady here. It's at 21.8 or 21.9 million roughly, down from 22.56. So that's good. Q3 was obviously lower there, but overall still pretty good on that. Cost to mine 1 BTC minus depreciation came in at 10.3 for me on my numbers. And we've seen that kind of go up here, spike a little bit here in Q3 and then down in Q4 and again in Q1. So that's good to see as well. Bitcoin mines quarterly has been continuing to grow ever since Q3, and that's always good to see. We want to see continued growth in production. Debt to equity is still really good, 0.10 basically. Current ratio is also really good, 3.26. They have enough cash, current assets to pay off current debt 3 times over, so that's good there. Total current assets has been decreasing here, but they have been obviously installing a lot of miners, so that's contributing to that. And total current liabilities has actually come down a little bit here in Q1 to 112 million from 121, so that's also good there. All right, let's take a look at the numbers that we do have down here. We'll get back into the metrics in a second here. So assets, cash and cash equivalents was down to 158 million from 230 million. Restricted cash, actually, this is the first time that this was reported at 29.4, almost 29.5 million there. Accounts receivable went down to 19.8 from 26, so that's, yep. And then costs and estimated earnings in excess of billings was 0 this time around. Prepaid expense and other current assets was, let me zoom this in for you guys as well, plus for me, 22 million roughly. So that's actually down from 32 million here that we had. Digital currency went up to 121 million from 109 million. Future power credits was down to 271,000 from 24 million. And that was it. So total current assets is at 365 million right now. That's actually down from Q4 at 443 million. Total current assets, that's that one. Total assets also went down a little bit here to 1.2 billion compared to 1.3 billion. I'm guessing that's probably because of, well, property and plant and equipment actually went up here to 717 from 692. What do we have a big decrease here? Not really any really big decreases. Why is that coming up that way? Let me see here. Total current assets should be that. That is that. 600, that's down a little bit here, about 10 million on that one, about 1 million there, about 8 million there. Okay, so maybe that's what's contributing to it, but still, a big difference here is obviously in the numbers up here. Cash equivalents is down quite a bit, so that's contributing to it. Current liabilities, accounts payable and accrued liabilities is up a little bit to 19.6 from 18.4, still not too bad. This is a new one here, contract liabilities net of retainage of 3.9 million. Not sure what that is about. Billing in excess, that's actually down to 0, so that's good. Accrued compensation, that's down to 0 as well. Accrued expenses is up though, 82.6 million compared to basically 0 here in the fourth quarter. Deferred revenue current portion is down a little bit here to 2.7 from 2.8. Contingent consideration is way down here to 271 from 224 million. And then operating lease liabilities down to 1.3 from 2 million. So total current liabilities went down to 112 million from 121 million, so that's good there. And total liabilities went down to 158 from 168 million, so that's 10 million less, so that's good there as well. Total liabilities and stockholder equity is at 1.25 billion compared to 1.31, so a decrease a little bit there. And then let's take a look at the revenues here as well. Revenues, they have obviously quite a few business operating portions of it. So mining, hosting, energy, and then other revenue. So mining came in at 48 million, which was a nice increase here from the 30 million we got in Q4. Hosting was also up a little bit here to 9 million from 8.9, just barely up a little bit. Engineering was actually down to 16 million from 20 million. So total revenue came in at 73.2 million compared to 60 million. So that's good there. But the big part here and the problem is with hosting. If you look at hosting revenue was only 9 million, but if you look at hosting expenses, 25.6 million. Yeah, I don't like hosting for this reason. It's just one of those things that you're losing money on, and I don't like it. Otherwise, mining came in at 21, so about 50% there, a little bit better than that. Engineering was also 15 million, so that's also maybe, 5% there, 10% there, margin roughly. Selling, general, and administration went down to 12.6, so that's good. Love seeing that, down from 29. It's probably the best they've had here since Q2 and Q1. They've gone up to 16, 29, and yeah, down to 12. So that's good to see as well. Depreciation amortization went down to 59, actually up to 59 from 46. Change in fair value down to 5.7 from 17.9. Power curtailment credits went down to 3 million, negative 3 million compared to negative 8.5. Change in fair value, contingent consideration, that's down to 0. Realized gain on sale and exchange of cryptocurrencies is negative 13.7. So that's actually up from the negative 4.9. Casualty-related charges was down to 1.5 from 9.6. So that's good. Impairment of cryptocurrencies was down to 4.4 from 15.2. Goodwill, no goodwill there. Impairment on miners, nothing there as well. Total cost and expenses was down to 130 million compared to 204 million. So that's good there, almost 70 million, 74 million roughly down from that. So that's good to see. Gross profit minus depreciation came in at 54%. Then this is just on their self-mining part of it, which is good to see. And then gross profit minus depreciation for hosting, well, that's a negative 183%. So that's not good there. Let's see. Operating expenses, interest, that came in at about negative 3.8 million from 603,000. So that's an increase there. Big increase here was on interest and other income expenses. Income loss before income tax expense was negative 60 million compared to negative 145 million. So that's good there. And the net loss came in at 55 negative million compared to 142 million negative. So definitely a good improvement there, almost 2x better, 3x better, something like that. But they still lost per share. But they lost 33 cents per share compared to 90 cents per share. So that's all good there. Okay, they are making some progress and headwinds. I just don't like the hosting thing. I think without the hosting, they would probably be sitting a lot better as it is. Okay, BTC mined, obviously that has been increasing here quarterly, so that's good to see. Cost to mine 1 BTC minus depreciation came in at 10.3 thousand, and so that's good there. They've been kind of hovering around 13.5 and right around there on average. If you look at the quarterly results, on average they've been about 13.5, so they're down to 10.3, so that's definitely good there. And what else do we have here that's kind of interesting here? Revenue. So revenue came in at 73%. General administrative came in at 12.6. That's only 17.31%, so that's good. I like to see that under 20%, ideally under 15%. If not lower than that would be perfect. So overall, they are doing the right things, getting things installed, getting miners installed and everything else. So let's take a look at how they are actually valued right now, in my opinion. So they're around $11 right now. I have them at somewhere between $8.89 with a PE of 20 and somewhere around $13.49. They are pretty profitable, right around 54% net income from gross revenue on self-mining. So I am giving them, I think they're pretty well valued, but still, I would think that they can go much higher than this if they continue to do well, actually put out a positive EPS next quarter or this quarter, if possible. They still have to figure out what's going, well, they have to fix that one facility that has the immersion cooled miners in it. After the storm that came in through December, they're saying it's, well, they're working on it. We'll see how soon they can get that resolved, but that'll definitely add at least another 1 point some exahash to their capacity, which would be good, and then that would get them pretty close to the 12.5 that they're supposed to get to, I believe. Okay, so overall, things are good, trending in the right direction. The things that we want to come down are coming down. The things we want to go up are going up. So I do think they're pretty well valued right now. Kind of, I would even value them a little bit higher as it is, just by a couple of dollars maybe, because they are such a large miner and they have all these other operating divisions as well. The only one that I don't like is the hosting. I wish they would get rid of hosting. That one just kind of blows. Okay, let me know what you guys think of that one. And let's get into our final one, which is going to be on Marathon, and we'll call it a day. So Marathon has, one thing came up also yesterday was the SEC issues a new subpoena to Bitcoin miner Marathon, and here's what it's all entails about. Not sure exactly what it goes into. I didn't read the whole thing. I just saw this yesterday. I wanted to point this out to you guys. So Marathon disclosed a new subpoena from the U.S. Securities and Exchange Commission. The firm indicated that the subpoena relates to its mining facilities in Hardin, Montana, and that the SEC may be investigating whether or not there may have been any violations of the federal securities law. I don't know what violations would be there. They had a facility there. The facility got damaged, and they just shut down operations pretty much because it didn't make any sense for them, I guess, to repair it, or the repairs would have been costly, and they just figured it might have been better off not to do those things. Marathon says it is cooperating with the SEC, which is good, so we'll see what comes of this, if anything at all. Okay, as far as Marathon here, for their update, the only thing that I found interesting was revenues were $51.1 million for the quarter, slightly below prior year revenues of $51.7 million, as a 74% increase in Bitcoin production was more than offset by lower Bitcoin prices in the current year period. And obviously the increase in network hash rate and all that stuff as well contributed to it. Okay, so let's take a look at Marathon really quick, and we'll call it a day. So Marathon has about 189 million shares outstanding. Stock price is around $9 right now, give or take a little bit. Market cap about 1.7 billion. Current hash rate about 14 exahash. Future hash rate is supposed to be 23. They have been mining really good this month so far with everything that's going on with the network hash rate. All these miners have been doing pretty good so far this beginning of the month for May. And that's based on network hash rate, network fees going way up to where the miners were generating another 22, 24, 25% more per day on the BTCs that they were getting as rewards and the fees included in that. So we'll see how May comes in. Might be pretty good for all these miners. But looking at them, they have turned around here ever since late of last year, where they had issues with the facility in Montana. Ever since then, they've kind of turned things around a little bit, got their act together, and have started to increase their hash rate quite nicely. And we can see that they are, like I said, at 14 exahash. And you can see their hash rate growth ever since, well, we had that problem with Montana in June, July, and then ever since then, they have been on a kind of roll here, getting things installed relatively quickly. Sometimes we do have a little lag here in things being plugged in, energized, and up and running. But overall, really good growth here from basically 700 petahash to 14 exahash in about, what is that, 10, 12 months? So that's really good. Value, you can see here how much they've been creating as well. And here's a look at the last 4 quarters revenue. So Q2 was 24.9 million, Q3 was 12.69, Q4 was at 28.4, and then Q1 is at 51. It looks like currently the current quarter that we're in, which is going to be Q2, might be around 82 million. This is an estimate based on my numbers right now, depending on what they mine, where Bitcoin price goes, network hash rate, all that. That's going to change, but this is just an estimate right now. The last 4 quarters operating costs, you can see that that has increased in Q1 to 33.3, but that's given. It's a given because they have increased their hash rate so much in the quarter, so that's to be expected. Cost to mine 1 Bitcoin minus depreciation did increase here to 15.2 1,000. per Bitcoin, which is obviously much higher than it was in Q4 at 10.16, but they did install a lot more miners. I'm thinking that with the different sites, different facilities that they're using for hosting that are hosting miners for them, they may have different, obviously, electrical rates, things like that. So that's okay. It's still a little bit on the high side, but they don't have their own facilities. They are using hosting providers, so that's kind of to be expected. They're going to be up a little bit higher. Bitcoin mined quarterly has increased nicely ever since Q3, so that's good. Debt to equity ratio, lower is better. 1.38 is still not too bad. Obviously, that I think is looking at, I think that's looking at the total debt that they do have for like $700 million. That's not due until 2026? Can't remember. Somewhere around there. Then current ratio, higher is better. 16.21. That's no problem. They can pay off their current debt with current assets 16 times over, so that's not an issue there. Total current assets has increased as well to 386 million, and that's based on Bitcoin price going up in value. They do also have, I think, the largest HODL position right now. HOT8 would be second, and then I believe Riot would be third in that. Total current liabilities is also coming down here to 23.819, so that's good there. Current assets going up, that's also great. Okay, let's take a look at the numbers we have for them. Let's zoom this in. Okay, so current assets, cash and cash equivalents went up to 124 from 103, so that's good. Restricted cash is down to 0 from 8.8. Digital currencies went up to 189 million from 121 million. And let's see, digital currency, what else do we have here? Deposits went up to 11.9 from 2.3. And prepaid expenses went up actually to 60.2 from 40.8. So total current assets came in at 386 million compared to 277 million. So that's good there. Other assets, let's see here. They got 714 million in property and equipment. So that's up from 273 million. Advances to vendors, that kind of got swept over to the property and equipment as they got them. The machines here, investments was 57 million, so that's up from 37 million. Digital currency restricted was 80 million compared to 40 million. Long-term prepaids is up a little bit here to 9.3 million from 8.3. What else do we have here? Long-term deposits is up to 54.4 million from 1.2. Right of use assets is actually up here. We didn't have anything here reported, so that's up to 1.18. Digital assets restricted is 0 compared to 68.8. I wonder if that got swapped over here someplace. Digital assets restricted, digital currencies restricted. That could be it. What they reported here, that could be the difference on those possibly. And then total other assets was 917 million. So that's up from, well, it's actually down here. They're saying 917,624,000 from 917,680. So it's down a little bit here. But total assets actually up to 1.3 billion compared to 1.195 billion. Okay. Current liabilities is 3 million for accounts payable. That's up from 1.3. Accrued expenses is down to 17 million from 22, so that's good. Legal reserve is actually down to 0 now. Operating lease liabilities is actually up a little bit here, $10,000 up. Current portion of accrued and bond interest is up to 2.4, almost 2.5 from 1 million. So total current liabilities is actually down to 23.8 million from 26. So that's good there. Total liabilities is still down. It's actually down to 758 million from 809. So that's at least good. They're paying some of that stuff down as things go on. Total liabilities and stockholder equity, we're at 1.3 billion from 1.195 billion. So that's a nice increase there as well, almost 100 million. And then revenues. So revenues came in at 51.1 million compared to 28.4. And we can see here that that is actually, from Q1 of last year, they're down just slightly. Bitcoin price was much higher at that point as well. So it's actually nice to see that they actually came pretty close to that with where Bitcoin is and everything, and network hash rate increases, that they've been able to kind of turn that around a little bit. Cost of revenues, energy, hosting, and other was 33.7, so that's way up from 15, but they have a lot more miners installed, so that's okay. Cost of revenues minus depreciation and amortization came in at 17.7 million. That's actually down from 27 million. So that's good there. Other operating, let's see here. General administrative costs at 15.3 million compared to 30 million. So that's good there. That came down. Impairment of digital assets was actually down to 6.15 compared to 20 million here. So that's good. What else do we have here that kind of went up here? Realized and unrealized gains, losses. So they actually have realized gains here of 17.6 million where they had realized losses of 14.4. So that's good. Total operating expenses came in at, excuse me, 3.8 million. Is that right? 15, no, because we have the positive here, that's why. Negative 3.8 million compared to negative 436 million, looks like in Q1. So that's good there. That's a big difference in those two. So that's good there. Operating income loss came in at negative 7.16 million compared to negative 434 million in Q4. They dumped a lot of stuff in there. Excuse me. So net loss came in at 7.2 million compared to negative 406 million for the quarter of Q4. So that's obviously a good thing. It's probably the lowest it's been here in the last couple of quarters that it has. Yeah. So that's good. So they actually lost only 5 cents per share the EPS compared to $3.52, 65 cents, $1.75, 13 cents. So they are doing they're going in the right direction. Okay. Shares, you can see that down here. And looking back at some of the metrics that we do have, custom mine 1 BTC for me came in at 15.2, it looks like, minus depreciation. And let's see here, debt to equity, we covered that. Book value, 545 million. Price to book ratio, 3.13. Enterprise value at 826. EBITDA came in at 10.4, almost 10.5 million on it. And then revenue, general administrative, came in at roughly 30%. So all good. Good things are starting to happen for Mara, looks like. And let's take a look at the numbers we have here. So I'm looking at them with the last 3 quarters, current quarter that we're in, combined at about 174 million, 50% net income. We're looking at 87 million, PE of 20, $9.19. They're about $9 right now. I think they're a little bit undervalued because they are going to be growing so much more. I think they should be probably closer to the $13 mark as it is on that one. Okay. Otherwise, it's good to see that they are improving in all these aspects that we talked about. They are getting miners installed. They still have a bunch of miners to get installed, and it should be definitely a fun 2023 for them. Hopefully things will turn positive with the EPS and everything else. When that happens, I think the stock should do even better than what it's doing right now. As far as how has it done so far this year, if we look at it here really quick as well, you can see that it's done pretty good on the 12-week, 8 weeks. On the 4 weeks, it's actually down a little bit. On the last week, it was up a little bit here. So overall, pretty good progress. Okay, so that's it. So let me know what you guys think of it all. Obviously, the spreadsheet is going to be available to my Patreon members. The YouTube members are going to get the printouts of these charts as they are. And then we'll see what happens tomorrow. We got some more reporting to do on Q1 reports from other miners. We'll see what those entail. And then we'll see what happens with tomorrow. Okay, so that's it. Like I said, hope you guys enjoyed it. If you did, hit the like button, subscribe. Helps me out tremendously. And I'll see you guys in the next one. Bye.